In previous videos, I've talked a lot about my favorite trading strategy, and that is the volatility squeeze followed by a breakout. I've done a few videos on how to trade that strategy, and even a video on how to scan for it using thinkorswim and the TTM squeeze indicator. But the problem is you can't always find one of those patterns setting up, so what do you do in the meantime? Well, in today's video, we're going to go bottom fishing. I'll go over the correct way to try and identify a stock that's been in a downtrend and is just about ready to reverse and start to move up. So if that sounds good, stick around, and we'll see you after the intro. Alright, so just like in my other videos, I always find it easier to explain these strategies using a real live example. So this is a stock that I've been looking at recently, Nucor, ticker NUE. And you can see it's been in a downtrend for quite some time now, since around April. It's been in this pretty well-defined downtrend, and it's starting to look like it might be bottoming. So we'll go over this chart, and I'll show you what kind of things to look for, when to get in, what to kind of use as a buy entry, and just overall how to analyze this type of setup. This type of pattern is much different than my previous videos of trading breakouts. On a breakout, you want to trade that initial candle. As soon as you see the breakout, you want to jump into this trade. Bottom fishing is not the same way. You don't want to start jumping in too early because you're going to be wrong a lot more often than you're going to be right, and it's going to eat away at your account. And I'll show you what I mean by that too. I mean, if you look at this chart, you'll see there were lots of times where it looked like it was going to reverse, where, say for example here, you had this downtrend, really nice big green candle, bullish engulfing candle. It looked like, okay, maybe that's the bottom. But if you got in here, you just would have been chopped around for a few days, maybe possibly made some money if you got out over here, but more than likely you would have held on, it would have rolled over and continued to make new lows. So you really want to be careful when you're trading this type of strategy. You don't want to rush in. You want to make sure that you can see several signals that indicate that the bottom might be in. And just know, you're never going to get in right at the bottom. The reason for that is, again, you want to wait for the pattern to set up. And because of that, you're not gonna get in at the lowest price. All right, so let's analyze this chart, and because this is one that I'm actually considering, that I've been watching for a while now, and considering starting a position soon in. So I'll show you what I've been looking at. If we bring this up, we can see that almost during the entire downtrend, if you draw this line connecting all the lower lows, during that entire time, we can see what the RSI has been doing. It's actually been increasing. Now this tells us there's a bullish divergence between the buyers and the sellers. While the price has been going down, the momentum of that downward move, or the aggressiveness of the sellers, has been slowly deteriorating. And what's really notable is on this last low here, which by the way also happens to be a hammer candle, but on that last low, the RSI didn't even get oversold. It never cracked that 30 level. So where we have an increasing RSI, and we can see the same thing on the MACD if we looked at that, similar type pattern, maybe not quite as pronounced as on the RSI, but we can see we're getting, slightly higher lows on the MACD, but I prefer to use the RSI for this type of analysis. We can see that we're starting to get multiple signals indicating the same thing, and that's what you want to look for when you're trying to find a bottom. Now, like I mentioned, we have a hammer candle here. So when you see a hammer candle like this, what you want to do is you want to look for a follow through day. And we did get that actually. So we got a hammer. The next day we got a follow through, nice green candle closing higher than the previous day. Now, if I had seen this, which I didn't, but if I had seen this, I probably would have took a small starter position on this day. And again, for several reasons. It's a bounce off of the bottom trend line. It's a hammer candle. It's a follow through day. And again, like I mentioned on the RSI, it never got oversold on this new low. So all of those things together indicate that, okay, we might be getting a bounce. So this might be a good spot to enter and get in for at least a short-term trade, if not an actual reversal. Now, like I said, I didn't see this day, so I didn't get in at this point. So now I've been watching the stock, and so what I'm looking at now is, we had a low back here, got a little bounce, and it's interesting that this bounce made it right to this previous support level. So this previous support level, had three, I guess you could call it even four times before it finally broke through, now turned into resistance. So now we've had, one test of it here, another test of it there, a third test, and now we're coming up to the fourth test. So when you start to see a stock doing this, you want to watch to see what the next move is going to be. I mean, it's possible this could just roll over and continue to make new lows. But just because of everything else that we've seen, I don't think that's very likely at this point. Now, I'm not saying this is definitely the time to jump in though either, because like I said, it's right at resistance. So we don't know if the stock's going to break out this time, or is it going to pull back one more time, maybe to the moving averages, or is it going to, like I said, roll over? So there's two good ways to trade this at this point. What you'd want to do is you want to watch the stock for one of two things to happen. My preferred scenario would be if the stock actually did pull back one more time. But I would like to see it pull back only up to these moving averages, which if we look at it, if it comes to the moving average, that also coincides with this previous low. So really what I'm hoping for is a pullback somewhere around $145. That pullback followed by a bounce. And by a bounce, I mean a green candle that takes out the high of the previous day. That would be, I think, an ideal entry point. The reason for that is it would give you a pretty low risk entry because you'd buy the green candle and you would set your stop right below the previous day's low. So that would probably only be about 1 or 2% risk. Then from there, you'd watch what the stock does. If the stock does continue to follow through from there, this level, this 152.50 becomes absolutely critical again. Once the stock gets up there, you'd want to watch to see, is it going to break out on that fifth attempt or is it going to get rejected again? Now, if it does break through 152.50, that would be your other entry point. Either as a second entry, assuming that the stock pulled back and you bought it down here. Once it breaks through 152.50, what I would do is I would move up my stop on the initial purchase, add to the position on the breakout, and then enter that stop, somewhere, let's say around 148 or so, just below the 50-day moving average. Now, if we don't get that pullback back down to the moving averages, this stock might just break out. And if it does break out above 152.50, I mean, the same thing, I would still consider that as a good entry point. The only thing there is your risk will be slightly higher than if you buy it on the pullback. You'd have to give it again, at least to just below the 50-day moving average. So, so we're probably looking at more like, I guess it's only about 3%, 3 to 4%, depending exactly where you're able to get in. So still a pretty nice risk reward scenario. And then it just depends on what the stock does from there. And so just one final thing when you're doing this type of trade, it's always a good idea to zoom out and just see what's to the left of the chart. So if we look to the left of this low right here, we can see that if we were to extend this support line, we could extend this all the way back to here. And look at how many times this level was either resistance, resistance, support, 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 broke through, support again, and now it looks like it might be support again. We did get this breakthrough here, but that was just a short two or 3 day event. So it came right back above it again. So we're back above that support level. But you can see how critical this $141 level really is for this stock. And we can actually do the exact same thing at this other level. So at 152.50, we can draw a trend line there also. And it's maybe not quite as pronounced, but it was resistance here for a while. It was resistance there, finally broke out. Again, as soon as it gets underneath it, keeps hitting its head on it, resistance again. Then it was support briefly before breaking through, resistance again, broke through, held that support for 3 times here, eventually broke through, and again, now it's resistance. So when you zoom out on a chart like this, you can really see what the important numbers are. So, like I said, that 140, 141 level and the 152.50 are 2 very critical levels for this stock. So those are the levels you want to watch for, either a break below or a break above, and that'll help you trade this stock. So there you have it. That's how I'm trading Nucor. If you found this video helpful, please hit those like and subscribe buttons, and we'll see you next time.